Hi, my name is Linda Eedes, and I'm a senior member of the Regarding Capital Management, or RECM, investment team. Today, I'm going to talk to you about the RECM Global Flexible Fund. Now, this is a fund which is a worldwide balance fund, which enables us to invest locally or globally in any asset class, depending on where we see value today. It's benchmarked against CPI plus 8%. So what that means is that we're looking to outperform inflation plus 8% on an annualized basis. Now, looking at the history of the fund to the end of May 2013, you can see that we've managed to achieve that for our investors. So the short-term history has been good, but I'd like to draw your attention to the long-term track record of the fund, the since inception numbers. And you can see the fund has been in existence for more than a decade now, since April 2003. The fund has actually managed to generate 10% real returns for its clients on an annualized basis, so 10% above inflation over time per annum. Now, looking at how that has been done over the history of the fund, you can see that this graph represents the Global Flexible Fund's performance in maroon versus that benchmark in gray. And the first thing to note is it has consistently remained above that benchmark, but importantly, during some periods of time when the market was substantially down. You can see that during the financial crisis, the Global Flexible Fund held its ground incredibly well. It in fact fell by 3.8% when the South African equity market was down by 40% and the global market was down closer to 50%. Now that comes down to the value philosophy, which is to only ever buy securities when they are cheap and to not buy securities when they're trading well above what they're worth, because that exposes your investors to the risk of permanent capital loss. So let's take a look at how the Global Flexible Fund is positioned today. Looking at the pie chart, you can see that the Global Flexible Fund has quite a sizable position in global equities, just under 43%, and 33% in South African equities. It has very little in other asset classes such as property and bonds, and that's for the reasons that come back to our philosophy. Those sectors of the market are expensive, and despite giving slightly higher yields than cash, also, more importantly, expose investors to the huge risk of capital loss from this point. So we focused our attention on the equity markets, and in particular global equities. Now, in the South African equity market, we today are seeing some overwhelming opportunities. And those are primarily in the resources sector, and in platinum in particular, and then in other areas of the market such as gaming and leisure. Globally, the opportunity set is more diversified. The great benefit of being able to invest locally and globally is that globally we can focus predominantly on high quality businesses, whereas locally there aren't enough high quality businesses to stick to high quality alone. So locally we buy cheap stocks and prefer high quality, whereas globally we can actually say high quality and cheap stocks only. Now, you can see we've had some exposure to some interesting areas of the global market. Exposure to areas of Europe, such as Carrefour, which is a European retailer, and previously we've had exposure to areas even such as Greece. Now, if you want to invest in cheap stocks when they're significantly undervalued, typically you have to do that when they're out of favor. And so when the European recession was top of mind for investors, stocks like Carrefour were extremely cheap, a European retailer in the heart of the European recession. What it meant is that the price was so low that it was trading below its property book alone. Now that price is up substantially since then, more than 50% in US dollars. And yet the fundamentals of that region haven't really changed much. We have a saying at RECM, which is that when you buy stocks which are cheap, good things tend to happen. Our investments in Greece also turned out to be very good ones over the last year and a half. And again, the Greek macroeconomic situation hasn't changed fundamentally. But what we were able to find were high quality investments where the baby was literally being thrown out with the bathwater. Locally, as I say, the theme is more concentrated in resources and gaming and leisure. The great thing about this fund is that although more recently the global stocks are the ones which have contributed to returns, there will be an environment such that that is the opposite. And having that opportunity set really enables you to take full advantage of the best ideas that RECM comes up with.